What a beautiful, nice move to the upside for the S&P 500. Close at new all-time highs. Hey, somebody check on their bearish friends. They're still trading like it's 2008. Now, what's something that I always talk about on this channel? We talk about the chop phase. We talk about the trend phase. Now, everybody that watched my last video, you know, I talked about the chop phase and I gave us the chop range. And if you watched this morning's video, subscribe to my Substack, or maybe you're in my Discord, you know I gave you the chop range numbers. And Uncle talked about it. We need to watch for the breakout. Now you guys can see here, what was the chop range? It was chopping between my fib levels. I mentioned to you guys, we got to clear 543.6 to the 544 zone and to be bullish, and to be bearish, we had to break down 540. As you guys can see, the market makers made their decision. They broke out 543.6 to the 544 range. They ended the chop range and gave us a beautiful, what is that, a $4+ move, more than that, to the upside, giving us new all-time highs. It happens constantly, guys. This was the chop phase, and then we broke out. This was the chop phase, and then we broke out. Even this was a chop phase. Sometimes chop phases, they don't go sideways. Sometimes they flag out, okay? This was an even bigger chop phase. This was a big chop phase right here. Boom, a chop phase. And when that chop phase happened, we had that triangle pattern. You guys can see back on May 9th when we got the close above the triangle pattern, market just kept going up from there. You guys understand the two market phases, why it's so important to understand them. Okay? The chop phase leads to the trend phase. The trend phase leads to the chop phase. Now, as you guys can see, each chop phase and trend phase, they have different length. Okay? There's no one size fit all. Oh, it usually lasts 2 weeks, or usually lasts 3 days. Sometimes it lasts 3 days, sometimes it lasts 2 weeks, sometimes it lasts 1 day. Okay? We got to be prepared and always take it one level at a time. Okay? And Uncle used the 15-minute chart, guys. 15 to 30-minute chart. I don't go any lower than a 15-minute chart. You guys can see here, right? This pink line, that was my 544 level. Okay? We broke out. We broke out right there. Okay, why is this not working? We broke out right there on the 15-minute chart. We got the close above. That led to more outside. I had a next level at 546. It was alerted in the Discord. Got that close above it right there. Okay, and this, I was working, I was charting, I was working, I was trading. It was all there. Okay, I wrote it all there. 544 cleared. I wrote it there when it happened. You know, when 546 cleared, I wrote right here. 546 smash and cleared. Just calling out the setups. Level to level style. Simplicity is the way, chat. Okay, so what's the plan now for SPY? Okay, now that we got the breakout, we got new all-time high close, right? We got to look at what was the last critical level that was cleared. Now, this 546 level, that's a macro level, fib level that I have here. Okay, macro level, fib level. All right. It's actually the 1.5 Fibonacci level. And it was cleared today. It was cleared today. So, to keep it quite simple, as long as above, we're going to stay bullish, okay? Above 546 is bullish. More upside as possible. Now, if 546 failed, is that bearish? Well, for that one setup it is, but it's not bearish. That will put the next level in play. The next level being 544-ish. Okay? Now, that was the resistance zone of the chop range that we recently had last week. To keep this breakout of the chop range intact and to stay bullish, 544 lowest must hold as support. So 546 and 544 must hold as support to stay bullish. Okay? Now, we got to be ready for the bear case scenario. We can't just assume it's always going to be bullish. We want to be ready. Even though the market's been bullish, we got to be ready just in case. If 546 and 544 fail, it's pullback time. That's a bearish sign from the price action that it's pullback time, putting 540 or lower in play, especially below 540, because 540 was the bottom of the chop range. All right, so it's staying above 544 keeps the breakout intact. As long as the breakout is intact, the price action is overall bullish. Okay, if we're gonna switch to bearish, we got to see the breakdown of those levels, chat. All right, here is triple Q. Look at that. Last week we broke out that 478 level. All right, I mentioned if we break out 478, we are bullish. Today, I mentioned to everybody, if we break out, if you watch my pre-market video, we break out 480, boom, more upside is possible. And man, was that beautiful. Was that beautiful. We smashed that 200% fib level. Was at 485.6. Today's high was around 486.8. We'll round it to 487. All right. So if Triple Q wants to defy gravity and ignore logic and continue to be unhealthy, it's going to have to clear 485.6 and 487 to trigger more upside. If it wants to pull back, because this is a very steep up move, if it wants to pull back, it needs to break down support starting with 482, well, 484, 482, 480, and 478. Those levels must fail, especially 478 to give us a deeper pullback. All right, Tesla, it went for a bounce despite some profit taken last week. It went for a bounce. It closed today at 187.4. That's very, very important to mention, because if I move out these horizontal lines real quick and I show you guys this 23% fib level, 23.6 fib level, all right, it's at 184.6. That level was officially cleared today. Okay, I have fib levels from April 22 bottom to the April 29 top. That 23.6 fib levels at 184.6. We cleared it today. Now I'm gonna stay bullish on Tesla as long as above 184.6. All right, and I recommend you guys do the same. It's up to you though. It's up to you. All right. From here, next resistance is at 189 and 191. Got to clear those two levels and we can get more upside, maybe all the way up to 199-ish. All right, I will switch back to bearish if 184.6 fails as support for the false breakout setup, and I will look to short if that level fails. NVDA, well, it closed just above that 1.618 fib level at 130.8, guys. Bears got to give us that daily chart close below 130.8 for a sign of a pullback, put in 128.8 and 127 or lower in play. Otherwise, if 130.8 defends that support and the price actually stays above it, because it's not right now, but if it gets back above it and it clears 132.3, that will be the next target. And if it does, 134 in new all-time highs would be in play, all right? But below 130.8 and 128.8, I would favor a pullback. Apple, interesting, it stayed above that 213.2 level. I covered it this morning in the pre-market video. If it can clear 217.5, 220 and 221.5, we can get some more highs, okay? But the next one it got to clear is that 217.5. To be bearish, it's got to break down 216 and 214.5 to put 213 or lower in play. Below 213, I would favor a deeper pullback. AMD, it's hanging in there, closing around where it's been closing. Not much of a difference. I will favor a bigger move if it can get above 160 and 162 to the upside. Okay, as far as the downside goes, I need to see it break down 157. It tried today, but it failed to give us that daily chart close. So 157 needs to break down for me to favor a deeper pullback. Here is Amazon. Now notice how with Amazon we broke down this fib level. Broke it down that fib level last week. And today, we back tested it as a support, as a resistance, okay? Broke it down, back tested it as a resistance. So 184.7 is critical, all right? That's my equilibrium level. If we can get back above it, I would be bullish on Amazon above 184.75, okay, in favor of more upside. But as long as below, I'm overall bearish. Breakdown of 183 would be bearish. Follow through, put in 180.8 or lower in play. Here is Google, still basing just below my fib level at 179-ish. It's got to clear 179, give us that daily chart close above 179, and I would be bullish. And I'd favor 182 or higher in play, okay? But as of right now, it's basing. Bears aren't showing much strength. It could break out, and if it does, it'll be bullish. But if bears want to showcase some strength, they'll need to break down 177 and 175 to put 173.7 or lower in play. Got to show us that bearish behavior of breaking down support. Netflix is not showing bearish price action behavior. It's actually showing bullish price action behavior by clearing resistant levels. And the last fib level it cleared was 673. All right. So staying above 673 will keep the breakout intact. Clearing 676 and 679 would definitely be bullish follow through, giving us higher highs, more upside. All right. I'll switch back to bearish if it can break down 673 to put 670 or lower back in play. Okay. And here is Bitcoin. Looks bearish so far, chopping between my fib level at 67.2K and 65.1K, all right? 67.2 to 65.1K is the chop range, okay? Break of the range should give us the next leg, all right? Here is dog pool for SPY. 542.7 is where 63% of big money's activity was at, over 1.5 billion. No, 4.9 billion, even more than I thought. Holy moly. Big money's getting busy with the dog pool. All right, let's take a look at the SPY's option flow. Filter for 100K premiums or above, and it is bearish. All right, triple Q, bullish. Tesla, bullish. NVDA is bullish. Well, I guess I went too fast and the system just crashed on me. But anyways, thank you guys so much for watching. Peace.